Recently in the news, there's been a lot of talk about the lowering of the official cash rate, OCR. But what does this actually mean for you, the consumer? In this video, I'll be going over what the official cash rate is and what effects it has on the overall economy. Hello everyone and welcome back. On this channel, we talk about money and personal finance. So if you're interested in this topic, be sure to like and subscribe and all that good stuff. And now let's get into it. The official cash rate is a term used in Australia and New Zealand. It is the interest rate that central bank charges on loans to commercial banks. The central bank adjusts this rate periodically to affect the rate of loans, housing, inflation, and other economic factors. This rate is revised every 6 weeks or 7 times a year by the Reserve Bank of New Zealand. In the latest revision, the Reserve Bank cut the interest rate from 1.5% to 1% in an attempt to meet employment and inflation objectives. This dramatic cut of 0.5% has only been seen after the 9/11 attacks, the recession of 2008, and the Christchurch earthquakes. Currently, the official cash rate, which was first introduced in 1999, is at an all-time low. In a statement from the Reserve Bank of New Zealand, current employment is around the maximum sustainable level of about 68%, while the inflation rate is still under 2%, so it still has some room to grow. Domestic growth has slowed as part of the weaker global economic condition, and this rate cut was done in an attempt to stimulate spending and prevent further economic slowdown. In order to understand the effects of changing the official cash rate, we first need to understand how banks work. So, how does a bank make money? Banks make money by lending out money to borrowers in terms of personal loans, car loans, home loans, credit cards, and basically anything that they can charge an interest on. Where does a bank get the money to lend out? Most of the time, this money comes in the form of deposits in bank accounts, such as check, savings, term deposits, etc. Banks pay an interest to you for you to keep your money with them, and then they lend out the money to others. What does this have to do with the official cash rate? If a bank needs more money to lend out, it can borrow money from the Reserve Bank at a rate slightly higher than the official cash rate. A lower official cash rate may mean a lower interest rate on your term deposit and your home loan. In response to the rate cut, many of the major banks have started slashing their term deposit rate and also their fixed home loan rate. What are the effects of lowering the official cash rate in the medium to long term? When the interest rate decreases, people have a tendency to spend more since savings have a lower interest. There is also more pressure for the prices to rise since people are spending more, thus creating more pressure for inflation. So far, there has also been a surge in mortgage inquiries since the rate cut, indicating the housing market is unlikely to cool off anytime soon. Lowering of the official cash rate also reduces the value of the New Zealand dollar. This means that importers will need to pay more for the same goods. This increases the price of imported goods. On the other hand, exports become cheaper for overseas markets, which increases the demand for exported goods. If we now look at different investment vehicles, interest rate and bond prices have an inverse relationship. So when interest rate lowers, bond prices go up. However, interest rate has less of a direct relationship with share prices. But over the extended period of time, if consumers choose to spend more due to a lower interest rate, This means that businesses will do better, thus increasing the share prices. Alternatively, people might simply choose to move their savings into alternative investments such as shares, thus driving the share prices up. In conclusion, a rate cut is designed to stimulate spending and economic growth, but its effects may take at least a year to show up. Major banks have already started slashing its term deposit and home loan rates in response to the rate cut. I hope this video has given you some useful information on the change in the official cash rate. Check out my other videos if you haven't already, and I will see you in the next one.